Good morning and welcome to this Wednesday, June 2nd, 2021 edition of Trading Places Live at EarningsBeats.com. I'm Tom Bowley, Chief Market Strategist here at EarningsBeats, and I'll be your host for the next 30 minutes, featuring everything you need to know as you prepare for the trading day ahead. Well, we got futures up again. It is the first week of June. This is seasonally one of the better periods, or the best period really in the month of June. June overall can be challenging for the market, as I've mentioned on many occasions. Once you get into the third month within a calendar quarter, earnings have subsided. The market tends to look at other things. If there is bad news out there, it tends to be maybe hyped up a little bit more during the month because there's not a whole lot else going on in terms of earnings reports. And so, and this isn't just my opinion, this is fact. I mean, if you go back and you look at the market over the last 70 years on stock charts, you can use seasonality for the last 20 years, but you can go back and you can pull up the numbers and it's proven out. I mean, the third month of each calendar quarter is the difficult month. And so that's what we've started. And, we don't know for sure what's going to happen, but I can tell you that we've got the CPI coming out on June 10th. We got the PPI coming out on June 15th, and the Fed meets on June 15, 16, which is Tuesday, Wednesday coming up in a couple weeks. So you've got all that, and if you look ahead, you got to believe. I mean, if you look at the numbers, the headline numbers on the inflation are going to be big. There's no doubt about it. It's going to be the biggest we've seen in many years. So what is the market going to do with it? Well, I think we could see a sell-on rumor. First of all, I wouldn't be surprised. Typically, June 7th through the 10th or 11th tends to be a pretty weak period to begin with. So I think it's very possible that we see a little bit of selling there. And then we've got the actual reports that come out. Like I said, the 10th and the 15th, CPI and PPI for the month of May are released. And then you got the Fed on top of that with people speculating, what are they going to do? Interest rates are higher, blah, blah, blah. I mean, all those things kind of go into, are in play. The 10-year Treasury yield, I wouldn't be surprised to see us make a move higher toward the upper end of the range that we've been in, this 150 to 175 area. And I'll go over that chart with you in just a couple minutes. But, just knowing that inflation is, at least the headline numbers are going to be very strong, and you've got a Fed meeting coming up, it just makes sense that maybe there would be some selling of treasuries and a rise in the yields heading into those reports and into that Fed meeting. But anyhow, we'll see. Before we get into all that happened yesterday to start off the month of June, let me first take you over to EarningsBeats, where we are into our spring special. We only do this once a year, and it's the best deal of the year that we have. So if you're a trial member, this is going to be a much better deal than just simply allowing the monthly charge to hit. At EarningsBeats, if you're not familiar, at EarningsBeats, the regular monthly charge is $147 a month. And right now we're running a special where you can sign up for an annual for $997, but we'll throw in 2 bonus months for free. So you're getting 14 months for $997. So essentially it's 52% off that regular $147 a month rate. Now you do commit for 14 months, but obviously the savings are pretty significant. So just want to make sure everybody's aware of that. If you're new to EarningsBeats, you can come in, sign up for a 30-day no-cost trial. Costs you $7 at the beginning, but we refund it to you. So literally you have 30 days to kind of check out the service. And if you like it over the next couple of weeks, you'll be able to take advantage of the spring special. It does end on June 15th, though, Tuesday, June 15th. So keep all of that in mind. If you'd like to just join our free community, you're more than welcome. We'd love to have you. Our EarningsBeats Digest newsletter. It's published and delivered 3 times a week, Mondays, Wednesdays, and Fridays. Just had an individual stock that I think presents a really good opportunity, possible trading opportunity. That was published this morning. A company that has actually raised guidance just maybe 10 days ago, week to 10 days ago, and it's pulled back to a key support level. And the main reason I think that the stock pulled back to the support level was it announced a secondary offering. So that dilutive effect many times will take a stock down. I think it could be an opportunity. But those are the types of things that we present to our community on Mondays, Wednesdays, and Fridays. Talk a lot about relative strength, earnings, and that sort of thing, raised guidance. There's no credit card required. You can unsubscribe at any time. All you have to do is go to earningsbeats.com, scroll down, find this box here, enter your name and email address, and hit that subscribe button, and we'll get you started. All right, let's take a look at what happened on Tuesday. I can tell you the market, did weaken after a little bit better action early on, and we were kind of weak throughout the rest of the day. Small caps, though, if you take a look over here, up 1.5%, big move. Many small caps, there's a lot of energy companies in that small cap space, and energy had a big day yesterday, and we'll talk a little bit more about that in just a bit. But the Dow was up only 45 points. S&P finished down 2, the NASDAQ down 12. Mid caps did better, up about 0.3%, up 17 points. And then, like I said, small caps is where the strength was. I think overall, all of the AD lines are okay, although we have seen the Dow and the S&P turn lower here just recently, these last couple of days, well, maybe even last week or so. Most of that has been because we've been unable to break out above that, the trading range that it's in. And as a result, we haven't been closing on our high. We've been closing more toward our low, and that's been impacting the AD lines. But you can see mid caps, small caps, both breaking out to new AD line highs, even though price action has not yet done so. So maybe, I don't know, maybe it's a mixed picture, if you will, with the AD lines turning down the Dow and the S&P. But overall, I think the market still looks pretty good. Now, if we were to go down and break down beneath some sideways or rectangular consolidation zones, if we break out of those to the downside, then I'd be much more concerned. I don't see that happening. I think we're going to struggle. Personally, I just don't know if we're going to get this breakout. I know futures are up a little bit this morning. I don't know if we're going to get this breakout with these inflation reports coming out and with the Fed meeting coming out. If we do, I think it could be a head fake. So I would just be maybe a little more cautious. I'm being much more cautious. I've raised a lot more cash personally, just because I don't trust things. We've seen a bounce, pretty nice bounce in some of these technology names, some of the growth stocks. I don't know if that's for real with all this other stuff going on. We do have Max Payne, that webinar coming up in a couple of weeks, right before options expire later this month. That's always the third Friday of the month. There's just a lot going on. And I think the market could be ripe for quite a bit of manipulation come the middle of this month with those inflation reports, with the Fed meeting, with options expiring again. All of that in the middle of the month, I think we're going to have to really be on your toes as a trader. Long term, I would be ignoring everything. I believe market's going higher. So if you're in it for the long term, you don't care about this day-to-day stuff, week-to-week inflation, this, options expiration, that, then just hang in. I personally believe the market's going higher, and I think over time it's going a lot higher. Moving on to the sectors, you can see energy, big day, up almost 4% yesterday. I'm going to show you a chart on the crude oil. I think it just broke out of a very, very bullish pattern. So I see crude oil going higher. And if that happens, you got to believe energy is breaking out. But it's a huge move there yesterday in the energy space. Real estate also very nice. Materials trying to break out again. Not quite there yet. Don't have the dollar up, but the dollar's been struggling, still down near the lows. I think there's still a little bit of room to the downside before I'd grow overly concerned with the dollar. I think eventually we're going to see the dollar bounce back, but hey, so far the last couple of months anyway, I've definitely been wrong on the dollar. Dollar's going the opposite direction. But I think unless the dollar index, which is $USD at stock charts, $USD, unless that breaks, and if you pull up like a 15-year weekly chart, I think you'll see the key support level right at about $88 or 88. So if you get below 88 on that index, then I think we've got problems with the dollar, which would be very bullish for energy and materials area. It's things like gold. I think the weakened dollar, though, would probably coincide with a weaker market, and I just don't see the weaker market coming. So anyhow, take all of that for what it's worth. Healthcare really struggled yesterday, down 1.6%. We did have a negative divergence, which I think is probably playing out here. Higher prices, lower PPO. So I wouldn't be surprised to see a turn at the 50-day. Maybe we go a little bit below that. But if we do, this is a group that likes the month of June. And with perhaps some cautiousness building into the market later this month, I think this could be setting up for an opportunity in some of these healthcare names. Utilities, weak. I think that 64 area is going to provide some pretty good support. So maybe another 1% to the downside. I would expect utilities to rebound later this month. All right, moving on to the 10-year Treasury yield. As far as economic news, we're going to get the beige book out later today at 2 p.m. So other than that, not really a whole lot going on. We do always get crude inventories. So I guess if you're an energy fan, you do a lot of trading of energy, you want to check that out. But the beige book is it's a lot of economic evidence that's put together about 2 weeks before a Fed meeting. And there are 12 Federal Reserve districts, and each one of these beige books, a different Fed district bank will compose whatever, all of the economic activity from the various 12 districts and present it. And a lot of times that information is very heavily used by the Fed in determining its interest rate policy and whether or not it's going to raise rates, lower rates. But I think what everyone's going to be watching for in this upcoming Fed meeting is what they say about inflation. You know, because inflation, again, the 10th and the 15th, right before we get the announcement on the 16th, I think we're going to have two more big inflation numbers that come out. And the headline numbers are going to be startling. And again, I think market's going to be saying, okay, what's the Fed going to do? Are they going to, step up their timetable, raise rates to combat inflation? Or are they going to stick to their guns and say, hey, it's transitory. This is very temporary. We got a supply chain disruption. That's what's causing this. And it's all going to work through the system and everything's going to be okay. I don't know. We'll see. But in the meantime, this is the range I was talking about earlier on the 10-year Treasury yield. 150, I would say, to the downside, 175 to the upside. I think as we get closer to those inflation reports, I just believe that you're going to see folks selling treasuries. So I think we're going to make a run back up toward that 175 level. And I wouldn't be surprised if we're there when the Fed makes its announcement. And then we'll see what happens. It's just a guess on my part. But I believe the Fed's going to stick to their guns. They're going to say this is transitory. We don't see the need to raise rates yet. We're going to be vigilant, blah, blah, blah. And so I think we get to 175 and then we probably level off again. And I think the 10-year Treasury yield breaks above 175 as we start seeing more and more economic activity that shows things are picking up. I think that's what's going to eventually drive the 10-year Treasury yield higher. I don't think it's going to be inflation, just my opinion. And feel free to argue. There's lots of ammunition out there to argue for inflation. I just, everything I see just personally day to day, I see prices going up because supply chains were cut off. And so we've got this bubble and there's a lot of orders going in. There's tremendous demand and supply was restricted for a period of time. And so we're getting it's an economics 101, high demand, low supply, driving prices higher. But I don't think this is an inherent problem in our system. I think it's a short-term bubble that's working its way through as a result of the pandemic. Again, just my opinion. Feel free to disagree. I absolutely am wrong plenty of times. Could be wrong again, but I just don't see inflation being a problem. All right, let's move on to talking technically. I want to get into oil. So here's the crude oil. This was yesterday's candle. And I wrote this, I put this in my daily market report to members yesterday. Or at least I believe I did. I can't remember from day to day what I do, but I think that's what I did. But here is if I get it, come on, there we go. Equal highs coming across. I think that's pretty clear. March high, 3 highs during May, and then finally you can see yesterday, look at the volume pickup and crude oil breakout. Now this is an ascending triangle pattern. So if you're looking at this, as I am, I'm seeing rising lows. So here's a, for a ascending triangle pattern. Let me just go ahead and annotate. Take just a second. But an ascending triangle, first of all, you have to have an uptrend. And then you go through what you should see is an A, B, C, D, E pattern. So when you've got an uptrend, anytime you've got an uptrend and anything starts to consolidate, in this case, as we moved up, we had a negative divergence, should have been saying, hey, looks like probably running out of momentum. We should be expecting sideways consolidation. And that's when I begin looking for patterns. And so if you go and you see that's the A point, and then you come down and you establish that initial low. Now, sometimes you can have an ABC correction where you come down, this is A, your move up is B, and you come back down, you put in a lower low, which is C. Well, in this case, you can see we didn't do that. Not every pattern is going to be the same. We're going to consolidate in different ways. Well, there, once we put in that low and this low didn't go below it, and then we started rising again, coming all the way back up to the top, you can throw out the ABC pattern. That's not going to happen anymore at that point. So now what we have is potentially a cup, or if we don't make the breakout, we could have an A, B, C, D, E ascending triangle. We also could have, no, I don't want that. Let's do horizontal line. We also could have sideways consolidation. I mean, we got equal highs. We could have come all the way back down here to where that B level and back down to 57.5. You just have rectangular sideways consolidation. That also is bullish. So there's a lot of different ways this could unfold. And I also mentioned the cup. So, I mean, if you're looking at this, okay, that's not a very good line. I don't know what I'm doing there. Let's try this again. I didn't even know I could do that with stock charts. All right, so there, and there. So you kind of see that cup form. So if you'd gone down, hit this 20-day and broken out, it would have been a cup handle pattern. But it didn't. Instead, it went back down far enough and then started to come back up where this now is, whoops. There we come back down and we establish another low before the breakout, and that is D. And then here on the breakout, that is your E pattern, or your E point within the pattern. So right here. So this is an ascending triangle. This is textbook. You rise. A lot of people overuse patterns. They see a pattern, they don't look at a prior trend. You just happen to see some lines that you can connect and looks like a pattern, and you just call it a pattern. A continuation pattern needs to have a prior trend. You need to have an uptrend or a downtrend in order to have a continuation pattern. Otherwise, you're not continuing anything. Here, you had a move up. You've got this continuation pattern, which, by the way, I should point out, is the measurement is from the top, which are the equal highs, down to that first point, B. So right down to about here. That's your measurement. So we've got from, I don't know, 67, 57, 57, 10 points. So when you break out the measurements, another 10 points. So at 67, we're expecting it to go to 77. Okay. Now I'm going to go ahead and get rid of this. And let's move on to the long-term chart, because what I want to show you on the long-term chart, this is a 15-year weekly chart. I want you to take a look at this right here. You see all these bottoms right at about 77. So we went 4 years trying to hold on to the 77 support. When we lost it in 2014, we haven't been back above $77 a barrel since. But notice the double top. Where did we get to? 77. So now we've got this short-term pattern over here, which is telling us we got a breakout and we should measure to $77. And then you come over here and you see a pretty key level right at about $77. So all of this, and by the way, when you get up to $77, look at this weekly PPO, negative divergence. So I don't think it's going to turn back up above that prior high. So I think if we get to 77, I believe the run in energy is over. I think the short term is very bullish from what's happening right now. And I think the summertime we're going to see maybe some focus on energy. I think money continues to probably shy away from technology, which is more money to go into other areas like energy. And I think energy will take advantage of it. So don't be surprised with, global economy strengthening, everything opening up. Don't be surprised for the demand to drive oil up to about $77 a barrel. Then be careful, because based on what I'm seeing here, I would not assume that you're just going to go through a 7-year resistance at $77, especially with a weekly negative divergence in play. So that combination would tell me energy, I'd be booking some profits as we start moving into the 70s, especially the mid 70s on crude oil prices. All right, let's move on. I want to talk a little bit more about June seasonality. I've been talking about that recently. Sent out our June seasonality report to members over the weekend. Actually, I think it was late on Monday night, which was Memorial Day. But I want to talk first about some May stocks. So in May, which we had released to our members, I think later, and it was about the 13th. We just had a lot going on with earnings season, didn't get that out until the middle of the month. But from the middle of the month on, these stocks performed exceptionally well. So I wanted to just show you a couple of these charts that did well in May. So the first was Live Nation. So you can see got off to a rough start early part of May, and it was right around the 13th, I believe, is when we sent out to our members the May seasonality report. But Live Nation was one of those stocks, and you can see just had a huge end of the month, and this was our best performer on that May list. Live Nation went up over 10% during the month of May. I think the S&P 500 was up about 2%. So Live Nation clearly outperformed. Here are a couple others, though, that did really well in May. NVIDIA, after the first half of the month was pretty weak, you can see second half of the month very strong and actually made a closing breakout above that April high. Next up, CME, really good move in May. Now we did come down here to open June, but we made the breakout. I wouldn't be surprised to see CME 210 maybe to the downside, but I expect that we're going to see this turn back up again. TCOM, which is ctrip.com, also rough start to May, but came roaring back very strong. I think up about 7% for the month. And then the last one was T-Mobile. T-Mobile looks very strong to me as well, trading above this 20-day moving average, trending higher. Right now it's up against resistance, so maybe we get another pullback, but rising 20-day looks good to me. T-Mobile also up about 7% during the month of May. And that actually did well earlier in the month while much of the market was falling back. So those were the 5 biggest winners from the month of May. Now we're going to turn our attention to June, and 2 stocks yesterday that were on our list had big days to open up June. One was Apache, and these are both in the oil area. But Apache, or I guess it's APA now, APA Corp, did break out above its May high. I think it's heading up to 24 to test its March high. Beautiful candle. Look at the volume pickup. Stock was up 10.87% just in the first day of June. Another seasonal stock does well in June is Occidental Petroleum, also in the energy space, also breaking above earlier high, volume picking up, and this one looks to me like it could be heading for 32. I would be looking at all of these stocks where you're seeing energy taking off. I'd be viewing that rising 20-day moving average as a pretty good area for entry during any pullbacks. All right, a couple others that I'll mention that we released in June. We give out 20 every month. And so 2 others. One is Dexcom. This is in medical supplies. And the reason I bring this up is it started off slowly to open June, number 1. But it did, after gapping up, it's pulling back close to gap support, rising 20-day. It's in that medical supply area. And I'm going to show you in a couple minutes, the healthcare group likes the month of June. But I'll get over that in just a minute. Lululemon, they report earnings tomorrow. They love the month of June. And this stock down on Tuesday to open June. We do have these highs right here, or excuse me, these lows trending higher, highs trending higher. I wouldn't be surprised to see a move up with earnings. All right. Let's see what else we've got. How about let's move into business training. This is in the consumer discretionary area. And this is an area that really likes the month of June. You can see 67% of the time. Now, this only goes back to 2010. And the average outperformance of this group relative to the S&P. So I've got this in here compared to the S&P 500. 2.4% is the average outperformance over the last 12 years. This group, 2/3 of the time, 2/3 of June's, has outperformed the S&P 500. So I think you've got to at least consider business training that area as a possible area to benefit for during the month of June. Also, though, I want to bring up a couple of these healthcare areas. So first, healthcare providers, we'll go back those 12 years, and you can see May and June, very strong. June averages outperforming the S&P 500 by almost 1 percentage point, which ranks it up in the top half of months in terms of relative performance. Then we're going to go into medical equipment. We go back 12 years here, and you can see again, May, June, this period, 75% of the time, or 75% of these months, we tend to see outperformance. And then the final one, medical supplies. Also May and June, very strong. So that's why, we've seen this weakness in healthcare just recently, and especially with the negative divergence. I pointed out the XLV kind of going down, looking toward that 50-day moving average. That's why I think on this pullback, we could have some opportunities, because in the month of June, we do typically see the market shy away from aggressive areas. And many of these defensive areas tend to perform better. And so when I talk about being cautious and raising cash, I also am looking at buying into stocks that I normally wouldn't buy into. I'm going to be much more interested in trading some of these healthcare stocks that have pulled back that I think look, interesting. And one stock that I'll give you that I think I mentioned in the daily market report is Agilent. Agilent, while everything's going on negative in healthcare right now, Agilent is quietly breaking out the new highs. PPO looks good. Yesterday, it had pulled back after breaking out. Volume's been strong. If I pull up the relative strength here, I think you'll see relative strength has been off the charts. Look at this stock relative to its medical equipment peers. So a stock like this pulling back because the market, or because healthcare is pulling back, I think could be creating an opportunity. So from the gap up open on Tuesday, you can see we're at 140. We went all the way down to 135 and roughly 135 and a half before we turned back around. I don't know. This is one, maybe in the short term, we get a little bit cheaper, but this is a leader in that space. So this is the kind of stock that I would be interested in. All right, let's move on to earnings. One of the most widely anticipated earnings for me was Zoom. And Zoom reported very strong numbers, but that doesn't always matter with these companies. I mean, this stock's been going down now for 6 months. I think maybe that hollow candle marked a bottom. They came out, they beat on the top line, they beat on the bottom line, easy beat on the bottom line, raised guidance, and initially the stock was down to 310 or 312. I was watching after hours, but it has come back, and right now Zoom is trading at 331, up $4. Still not breaking out. I would be really interested in Zoom when we start seeing 340s and 350s printing. So let's see what happens today. Again, the whole technology thing, I'm a little concerned about technology in June, but I'm also watching Zoom. I got out before earnings. I just didn't trust it. I talked about it on my show yesterday. I've been holding Zoom for a while. Hasn't been a very good performer for me, I'll be honest. But there's just something about this company, I believe, that's going to continue to do well as part of a paradigm shift because of the pandemic. But we need to see it on the charts. We've been seeing it. I think as long as it holds above the 20, you can own it here. If it rolls back over below the 20, I'd be careful. I would be out. I would not own it if it went back down below the 20. So I'll be looking probably to re-enter. We'll see. I want to kind of see how it trades today. Another one, HPE reported. They beat 46 cents versus 42 cents. And you can see the stock down 18 cents in pre-market. Actually, market just opened. We'll look at the next stock in real time here. APPS, Digital Turbine. I was expecting a big number here. Got a pretty good number. Beat on the revenues. Earnings per share 25 cents versus 22. Stock up almost 3%. It's got some overhead resistance, though, coming in near the 70 level, along with the 50-day moving average at 71 and change. So I would just maybe respect that area of the chart. Maybe we see a gap up pullback, but a test of the 20-day as it turns back up through the 20. If it were to pull back down and test that 20-day, I might take a shot with it with a fairly tight stop, close below the 20-day, I'd get out. But if it truly is breaking back out and starting to uptrend again, that rising 20-day should provide you some nice support. All right, let's wrap up with the three you must see. These are three energy names. I think you'll probably recognize them, or maybe not. First one's Marathon, MRO. I love the breakout that we saw yesterday. Got the gap up again today. It's already starting to pull back a little bit. I think 13 down to about the open yesterday, which was maybe 1270. Yeah, exactly, 1270. I think 13 down to about 1270 makes sense for entry. And then I would just watch that rising 20-day moving average. But MRO looks good. Devon Energy, DVN, also I think looking very strong with that huge breakout. Look at the volume. PPO moving to a new high. This just looks like a stock that is now in a nice trend to the upside. If you chase, though, it could be frustrating in the near term if we get pullbacks. The other one I'd mention is FANG. And FANG closed at yesterday closed at 86.61. And when I look at the candle body highs, I see 86.46. I see 85.03. I see 84.57. So that 86.61 was a breakout, and the volume confirmed. This pullback, I think, is probably going to be an opportunity. I would not be surprised if FANG moves back up to a high today. I think probably the pullback is complete, and it's starting a pretty nice uptrend. This one's been volatile, so be careful with it. You can see it pulled back to 70, went back up, tested its high, pulled back to 75. Now we're back to the high. But like the crude oil prices, equal highs, rising lows, ascending triangle, we're getting that breakout. So I think FANG is certainly worth considering here in the energy patch. All right, that's it for me. I'm going to be back tomorrow with your next Trading Places Live. It'll be a recorded version over at stockcharts.com. It will air on Stock Charts TV at 9 a.m. on Thursday, June 3rd. Hopefully, I will see you all over there. In the meantime, everybody have a great day. Happy trading.